Hi there, welcome back to ET. Now you're watching Markets at Noon with me, Kanishka Sarkar and Ankur Mishra. Time now to put the spotlight on Biocon Biologics, which reported a very healthy set of numbers for the quarter gone by. In fact, currently the stock is trading at the highest point of the day, nearly highest point of the day, up about 2% in trade right now. If we take a look at the numbers, it's been a stellar growth for them. Revenue has seen an uptick of about 19.6%. And to take us through if this growth is going to continue in the quarters to come, we are now joined by Shreehas Tambe, the CEO and MD at the company. Hi, Mr. Tambe, thank you so much for joining us today. Good afternoon. Well, first up, tell us what's the growth outlook of insulin portfolio in the US, if you could shed some light over there, and how big do you think this opportunity can be for your company in FY27?
Well, let me first start with saying that we've had a tremendous quarter. We've just reported our results, and this particular quarter has been phenomenal, both in terms of how the revenues have grown, and also in terms of how we've grown the EBITDA. We've had a 25% growth over last year on the revenue line, and we've also seen a very strong EBITDA growth. So it's been a tremendous quarter overall, since we actually took on the business and are running it as a fully integrated company. Insulin itself is a massive opportunity. We continue to be the only interchangeable biosimilar insulin in the rapid analog space, which is Aspart. And we also continue to garner market share with our interchangeable biosimilar insulin glargine, which is the long-acting analog. We see tremendous opportunity primarily because we see that there's this diabetic pandemic that continues to grow, and we believe in making sure that we provide solutions to patients who are living with diabetes. Our aspiration continues to remain in serving 1 in 5 insulin-dependent diabetics, and we are well on our track to get there.
Mr. Tambe, you mentioned about the market share. I want to understand how much market share do some of your key products have, and what are the QOQ changes in that?
Our market share for some of our key products, the therapy areas we've operated in have been oncology, diabetes, and immunology. In the oncology space, we've really done extremely well for the past several quarters. We've, for the 2 products that we had in the US, which was Ogivri, which is trastuzumab biosimilar, and the other brand was Fulphila, which is the biosimilar pegfilgrastim. Both products have continued to hold over a fourth of the market, which is a substantial market share, and they've been in the market for almost close to 7 years or more. That tells you that there's been a lot of ability to endure that space and be successful in it. Our market shares in Europe in the particular quarter, the quarter that just ended in September, have grown tremendously, where we've won several national tenders in the countries that we've chosen to operate. And our pan-European market shares are again inching towards a fifth of the market. So very strong showing there. And we've selected a few markets to operate in the rest of the world. And it continues to do very well consistently in the oncology space. In diabetes and insulin, we've just talked about it. There is tremendous opportunity again, because insulin continues to be a need across the world. And given that we are a fully integrated player from development, manufacturing to the devices, and with commercial capabilities in several parts of the world, our insulin franchise has seen huge demand and success as well.
All right, so that's about some key markets. But Mr. Tambe, with bevacizumab and denosumab in play, talking about your products, how are you prioritizing some of the key launches to keep that growth momentum steady?
At the beginning of this year, or maybe at the end of last financial year, we had given a guidance that we're going to be looking to launch 5 new products in the US. And we've delivered on that very well. We already launched 4 of those 5 products in the US and in Canada. So you're starting to see that already come through. The 2 products that you're talking about, Aspart and bevacizumab, and the third one being Yesintek, which is a biosimilar to Stelara. These products are already launched in the US. We have launched the biosimilar to Eylea, which is aflibercept. It's branded Yesafili. So that's already come on stream. And we have another product that we will be launching shortly, which is denosumab. So we have 5 products that we said we will bring to market, and we will be bringing all 5 in the next 12 to 18 months. Tremendous response for our biosimilar ustekinumab, early advantage in terms of how we've got formulary coverage. That is very, very encouraging. We continue to strengthen our oncology franchise with the bevacizumab offering, which is called Jubevni in the US. And then we just talked about the launch of Yesafili in Canada, and that has preferential placement in 3 of the most populous provinces in Canada. So I would say overall, a very strong start to fiscal year 26. And the full effect of all of this will start showing in fiscal year 27 in terms of revenues and profits.
Right, Mr. Tambe, let's also talk about margins. Are you confident of sustaining 19% plus margins as new products scale up and plant utilization improves?
We've actually maintained our margins for a very long time. We've always said that we would be looking to be in that space where our EBITDA margins would be in the 20s, I know low to high or low to mid 20s, and we continue to deliver on that performance. Even now, as you see, we are at 24% EBITDA at this point in time, and operating leverage has started to play in. So if you look at how it was in the previous year and how it is today, given that we are seeing growth, there's almost a 400 basis point improvement in the EBITDA profile. And the reason for that is because the operating leverage is beginning to show as we grow market share and as revenues are starting to grow.
All right, so that's about margins, but let's now also talk about revenue. Now, how do you see the revenue mix shifting between developed and emerging markets, and where do you think the next leg of growth is going to come from?
I think if you look at our revenue split, we are a very well diversified business in terms of how our revenues have come. We've got a very well split in terms of the US, which is roughly about 40% of our revenues. We've got 35% of our revenues coming in from Europe, and about 25% coming from emerging markets or rest of the world. That ratio has more or less remained same for a while, and the reason for that is all the regions are growing. That is very encouraging again, because that doesn't mean that we have a dependency on any one country, any one product, or any one region. We see the growth coming across in all geographies, and that is something that we find is a very, very balanced situation for a business like ours.
All right, Mr. Tambe, thank you so much for joining with your views on the quarter gone by.